Hi there, Serial Trader here. Let's have a look at the major US indices as of the end of the week here. Alright, so since the last video, I believe we did it after the close on Wednesday, we went lower the next day, intraday, and then had a pretty strong rejection upwards and closed fairly high up on the day. But we failed to take out that previous day's high. And then today, we again opened lower, went a little lower off the open intraday, and then kind of had a pump up. Well, this isn't really showing the full day's intraday action as volatile as it was, but we closed up slightly on the day, and still failed to take out the high of this candle on Wednesday, which was at 27.46.80. Today we thoroughly tested it and went to 27.46.75. So just a fraction of a point below the high on Wednesday, but that's still serving as good resistance. And if I was just going to the hourly chart here, that would be at least starting to change the hourly lower high pattern by taking out that level at 27.46.80, and so far it failed to do so. And before I dive too much into this chart, let's go to the Thinkorswim candlestick chart. And that 27.46.80, so that candle on Wednesday, that also happens to be the bearish engulfing candlestick. That was a signal for continuation of the downside. And to invalidate that candlestick, which would be at least short-term bullish, it may not change the overall downward trend, but it'd be at least a short-term bullish setback and lead to possibly higher prices. That would be invalidated by taking out the high again at 27.46.80. So the fact that we thoroughly tested that level and respected it by a fraction of a point and then rejected downwards, that perhaps that means something. That's a significant level that the market was unable to overcome. Now, before we go more with these charts, we'll go back to the wave chart here. So overall on the daily, I still like our 5 down for 1 or A. I like our 3 up for 2 or B. And now I still like the idea that we're coming down in this third leg down, whether it be a C wave or a third wave. We'll just say it's a third wave for now, for simplicity. And right now, like if I go to the hourly chart here, you can kind of make the case. Let's see here. Make the case that we have, say, 1 down, 2 up, maybe a 3, a 4, and a 5. Okay. That's certainly a possible interpretation. And let's get the degree down here enough. And that would be for an overall larger wave 1 of 3. Okay. So let me just get that into the minor degree. So possibly 5 down for a larger 1. And now we're potentially working some sort of corrective advance for this larger 2. And then, we come down to 3, 4. Sorry. 3, 4, 5 for this larger 3 or C to the downside, right? To complete that. So we're just in the early stages of forming this new impulse wave down, if that's what's going on, which currently I'm favoring that. Okay. Now, that being said, so top to bottom here, so our overall move down from the most recent highs, I did a fib pull on that, and we've basically come right into that 50% retracement zone, which is at 27.42.95, and of course we've gone as high as 27.46. And then the next level after that is the 618 retracement, which would be at 27.59.99. So if we don't break down here right away, that's the next level to look for. And then I suppose The next retracement after that would be 27.84.25. That's a 786. And beyond that, we have to start entertaining the possibility that this upward move is developing more complexly. That we have our WXY to the upside. Although currently no strong reason to embrace that interpretation at this point. So far this just looks like a regular, 5 waves down, possibly working our 3-wave upward retracement, coming into a fairly common Fibonacci resistance zone. So as long as we fail fairly soon here and roll over again, the current interpretation works just fine. And then the least likely interpretation still at this point is that we've got a new impulse wave, and this is our first higher low, and now we're just going to explode up. That's the least likely interpretation, and I'm really only going to embrace that if not only do we go up here and break this level, but if we go up, quickly and on high volume and momentum and break that level. That would argue that, okay, we got 1 up, 2 down, 3 up, but that just does not appear to be the probable scenario at this point. So for now, currently still just going to lean that we have our significant pivot up here, and I believe the absolute high came in at 28.15.15. Basically right off that 618 retracement of the overall decline that we started in October. And now just have our first impulse wave down. You can count a decent 5 waves out of it. And we broke, this support level we had here, the B wave low for our wave 2, and we filled, both gaps on the way down. So we'll have to watch this, but this still looks pretty promising for further downside ahead, as it stands right now. So yeah, I'll leave that as it is. We're certainly mentally prepared for a more bullish scenario, at least in the short term. But currently no real reason to embrace that as being the likely outcome. All right, that's good for the wave chart for now. So let's go to the fingers from candlestick chart. So yeah, we had the bearish engulfing candlestick on Wednesday. We had the positive trading Thursday. Again, though, still rejecting the T line. And then today, another positive day as well. Although, just quickly go to the 10-minute chart. So intraday. Now let's see where today started. Okay, over here, right here. So intraday, this was a choppy day. This is not a strong, convincing looking rally day. I mean, up, down, up, starting to come down. So very choppy, overlapping, very indicative of corrective price action, not trending price action. And you can see it seemed to just get harder and harder to get these little up pumps, and they keep getting met with selling. Marginally higher highs and higher lows, but it looks like it's compressing there and ready to roll over again. And again, rejecting that key resistance level at 27.46. That's the second time, like I said, that it's been rejected. So intraday, it was a very choppy day. It doesn't quite tell that picture, at least in full detail, when you look at the daily chart. Okay, it looks like the Thinkorswim platform just went down for some sort of evening maintenance. So we'll finish off the video just with the trading view charts here. All right, so the SPX daily candlestick chart, again, just to highlight, we basically just closed at or ever so slightly below the daily T line. We have this upper shadow rejecting these higher prices, that significant resistance level at 27.46.80. So again, rejecting that and closing just at or slightly below the T line. On a weekly candlestick chart here, firmly rejecting the weekly T line, which we basically were just opening pretty much on that when we opened the week, and then I obviously closed well down below that weekly T line, but we have a long lower shadow rejecting lower prices intra-week, although certainly still a lower week from yesterday's weekly close, or sorry, from last week's weekly close. So the downtrend on the weekly is certainly still intact as that T line continues to provide resistance. Okay, nothing to check on the monthly yet because we're not done this monthly candle forming. That's probably good for SPX for now. We'll go to the Dow Jones Industrial Average. And so the Dow very much the same. We've had this nice move down off of our corrective rally. At this point, we've come up just to close slightly below the T-line on the daily. So the T-line is still providing resistance on this daily chart. And the Dow has filled both of its gaps as well. As of Thursday's stab down there, we filled the second gap. And on the weekly candle for the Dow Jones Industrial Average, you can see we've once again closed below the weekly T-line. And you just see this long lower shadow rejecting the lows of the week, but still negative week on a closing basis and closing below the weekly T-line. So worth noting there. And we'll go to the Nasdaq Composite. And the Nasdaq still showing the most relative weakness, clearly closing below its daily T-line. And you can see just three days in a row now, this daily T-line is providing nice resistance. And we have not invalidated the bearish engulfing on the Nasdaq daily either. That would have come in at 72.85.60, and today we only got as high as 72.74.9, and yesterday was 72.74.3. So today we basically just tested yesterday's highs and then rejected again. Didn't test the highs of that engulfing candle. So this downtrend still intact, still finding resistance on the daily T-line, and on the weekly, Nasdaq well below its weekly T-line and another negative week on a closing basis. In fact, we've the only week that we closed lower was this week over here. And it's important to look at closing prices because they give good information as well. So yeah, this still looks right for further downside, certainly looking at from this perspective on the weekly, and certainly using closing prices more heavily weighted than intraday or intra-week. So the downtrend is still intact. That's the bottom line here. That could certainly change, but at this point there's no evidence of it doing so. And we'll go to the VIX. So VIX had a couple days of pullback at this point, looking to set a higher low above this most recent low, which was at 1609. So today went as low as 1810 and closed at 1814. So anything above that 1609 keeps our little short-term uptrend in VIX intact. And I would imagine any further downward weakness, and we'll have a nice pump in VIX again. Further downward weakness in the stocks, that is. So we'll watch it and see what happens. Next week should give us some more clarity, and we'll update at that point. All right, Serial Trader signing off.